Hello everyone, I'm Sidhant. Today the chapter number 29 for the module B of the principle is going to be discussed. So moving on to the chapter, which is nothing, that is Prudential norms on income recognitions, asset classifications and provisioning and pertaining to the advances. So before starting, first we will see what are important as an examination point of view, and after watching of the videos what you need and your behalf is to practice question from the question bank chapter wise. Whatever chapter you heard of, whatever chapter you read from the notes, you need to practice that. Then only you could think of a very good marks in the examination, and that's the key, I suppose. So starting with the chapter, so this prudential norms on the income recognitions, which is being regulated or which is being directed by the Reserve Bank of India to the banks to follow, is recommended by the M. Narasimham committee. Now, first of all, we will see what all we will see the non-performing assets definitions. As we more often than not we heard of that if the assets is not yielding or not giving return for the 90 days continuous, then it could become an NPA. But the NPA definition differs from loan to loan. Now we will see which loan has which definition. Now first, the term loan, the interest on the installment of the principal remains overdue greater than of 90 days is the term loan. This is greater than 90 days. Now for the OD and OCC, what is the definition of the non-performing assets? When we could say the asset starts become not performing is when it becomes out of order. Now what is out of order? Out of order includes outstanding balance remains continuous in excess of the sanctioned limit or the drawing power. Let's say, what does it mean? Let's say the sanction is 9 lakh and the drawing power for a particular year is 7 lakh, but the person availed greater than the availed amount, that is increases the limit greater than 7 lakh, then it becomes out of order. Now it might be chances that sanctioned limit is equal to the drawing power. There is a chance, but generally drawing power less than the sanctioned limit. Now if outstanding is less than the sanctioned or the drawing power but no credits continuously for the 90 days. So what the purpose of the cash credit or the OD is that the person draws the money from the account and utilize it for on their own purpose, but and for the short term, and after fulfilling the purpose it will again credit the account, that is the loan account, as soon as possible. So if the amount will not come, even the interest which is charged on the account is not come for the 90 days continuously, then the account becomes out of order. It's a definition for the cash credit or the overdraft. Now next, for the bill purchased or the discounted, as we have discussed in the previous chapter as well, that the banks used to purchase bill or discount bill or negotiate bill. Why? Because to liquidate, let's say the person will receive the money after 6 months, but he needs money, then he can sell it to the bank and bank can give the money but less than the amount as the actual bills. So in this case, if the overdue becomes more than of 90 days, then it becomes non-performing assets. Let's say the date of the payment of the bill is 20th of March, but the person deceived, the person ducked the payment and the banks remained unpaid for the next 90 days, then after it becomes an NPA. Next, the crop loans, agriculture finances, the NPA definition is different. That is for the long duration crop. If it's unpaid for the one crop season, more than one crop season, then it becomes NPA, and for the 2 crop season, and that is for the short duration crop, if it's unpaid for the 2 crop season, then it becomes NPA. Book liquidity facility outstanding is greater than 90 days in respect of the securitization. Let's say some assets got securitized, then the amount should come within 90 days, otherwise it will become NPA. Now derivative transaction greater than 90 days. Derivative, what is a derivative? It's a securities market. It is not paid for more than 90 days, then it become NPA. Now, income recognitions. What does it mean? What is the income for the bank? The income for the bank is interest gained while giving the loans. So whenever the interest charged, let's say for the 1 month, the interest amount charged to the borrower, let's say 100 rupees, but this 100 rupees has not been paid by the borrower actually, but in the system it will show that 100 rupees interest been charged on the borrower's account and it's act as an income to the bank, but that amount is not actually come. So that income recognition is not based on the accrual basis, but when they actually received. When the person give that 100 rupees, then only it could be counted as an income for the bank. Now, what are the exception? The exception is loan against fixed deposit, NSC, KVP, life policies in which income may be taken to income account in the due date provided adequate margin is available. If uncollected any fees or the interest, it should be reversed. Let's say the person hasn't paid the amount, but it is being taken as an income for the bank, then it could be reversed at the end of the year because it's an instruction by the Reserve Bank of India. Now, what some terms which is very important, like the gross advance. What do you mean by the gross advance? The gross advance is the standard assets. What standard assets is, we have discussed, the assets which yield or which produces income to the bank is standard assets. If the installment or the interest is not paid for 1 month, that is for 30 days, it becomes SMA 0. Then SMA for 30 to 60 days and 60 to 90 days SMA 2. After that it becomes non-standard accounts or NPA. You can say that NPA. After that, till 12 months it becomes NPA. After 12 months the name of the NPA got changed to substandard. Now for the again 12 months it becomes substandard. Now after 12 months of the substandard it becomes doubtful. As it goes forward, it becomes doubtful 1, 2 and 3, as I already provided the notes for the same. That is practice sector lending. In provisioning I have given all those things in the quick notes. Now, the gross advance is the standard assets plus gross non-performing asset is the gross advance of any bank. This is very important. Even the NPA calculate as a gross advance. But what is net advance? The net advance is the gross advance minus deductions. What all deductions? The deduction includes the provision held in non-performing assets account. Let's say some account has got NPA, become NPA, but the bank has provisioned some amount of money which kept aside in to cover up the non-performing assets loss. That is the provisions. Then it is a net advance. Now DICGC, ECGC claims received and held pending adjustment. Okay, whenever the bank do loans for some of the sectors like MSMEs or even the education loan, some of the guarantees are being availed by the borrowers. What do you mean? If the borrowers can't pay in future, then that guarantee agency will pay the amount to the banks. So in some of the cases where banks are in doubt, they buy the guarantees. So let's say some loans which becomes NPA, but the claim amount is being paid by the some guarantee agency like the ECGC or DICGC or CGTMSE, etc. So that claim adjustment has not been done, but the amount which is the NPA came to the bank. So just an adjustment needed. So these are included in the deductions. Now these are the other points are the post payment in the suspects account and the balance in the sundries account. Next, the net non-performing assets, the gross non-performing assets plus minus the deduction, the same deductions as mentioned above. The asset classifications to be borrower wise, not facility wise. What does it mean? Let's say the person has taken home loan, car loan and other type of loans. So if one become NPA, then all become NPA. It's a rule in India, because if he is not able to pay one of the loans, then how he could pay the other two loans? That's the reason. Now the next, the advances under consortium arrangements based on the record of the recovery of the individual member banks. Now, the advances, what do you mean by first consortium arrangements? Let's say 5 to 6 banks come together and give the loans, like in the case of Vijay Mallya. Lots of banks comes together and give the loan to the person, and one bank act as a nodal bank. Now, the advances under consortium arrangement based on the record of the recovery of the individual member bank. Now, how can one say that the consortium loan becomes non-performing assets? It could be said by seeing the record of recovery of the individual member banks, and individual member banks will allocate that this person has become NPA or not. If one will assign, I think everyone will assign the NPA. Now, accounts where there is an erosion in the value of the security or the frauds committed by the borrowers. There is a separate thing. Realizable value is lesser than 50%, doubtful, and if less than 10%, that is loss. It could be counted as a loss. Now, okay, what does it mean? Accounts where there is erosion in the value of the security or the frauds committed. Let's say that some person has given collaterals or securities to the bank, but he's not paying. Now, the bank, what the bank will do? The bank will sell the security and recover the amount, but the security itself got reduced in amount as compared to the market value. So what bank will do? The bank has to immediately value the securities first, and if it's less than 50% of the realizable value of the security at the time of taking as a security, becomes a doubtful, but if it's less than 10%, then it becomes a loss. Now, for the PACS and the FSS, PACS is Primary Agriculture Credit Society. It's a borrower wise, not facility wise. It's not applied here. If one loss got bad, we cannot make every loans bad. In this case, it's an exception. Now, the government guarantee, NPA only when government repudiates its guarantee when invoked. Guarantees can become NPA. That's sure. Now, the NPA only when government repudiates its guarantee when invoked. When the government repudiates means cancel. When the government cancel its guarantee, then we can take it as a NPA. Okay, the provisions are also done countries specific. All the provisions could also be done the country specific. Every country has designated as a risk factors. Some country will assigned A1, which is the least risk, and some assigned D, which is the most risk countries. Now, what is a PCR? Provisioning to gross non-performing assets. Gross non-performing asset we discussed in the last page, and the provisioning is the amount we took aside for a loan in order to cover when it could convert non-performing assets. So this provisioning are totally based on the uncertainty that this loan could become NPA. What are the chances that this loan could become NPA? Then the provisioning is decided. Now, takeout finances in the context of the funding of the long-term infrastructure projects. What do you mean by takeout finances? Takeout finances is in the context of the funding of the long-term infrastructure projects. For every long-term infrastructure projects, the takeout finances, that's the definition of the takeout finances. Now, next, the corporate debt restructuring. So what does it mean? It's applied on the consortium loans first, and corporate under financial difficulties. What they will do in this CDR mechanism helps to again make the business come profitable for the particular person through the consortium lending, and it applied only to the consortium lending. For outstanding more than 10 crore, then only the CDR is applied. What is the eligibility or what is the requirement? That is 75% of the creditor Y value not required before CDR can be applied. Like in the recent case, the Jet Airways case, I think that's not the consortium, because I think SBI only involved in that case. So the CDR not applied, but it's a nod of the creditors is required. CDR triggered by those who have 20% and more exposure. Okay, this CDR request can be given only by those bankers who has in the loans the total value is at least the 20% of the amount that bank has given. Then only he can triggered or start, initiate or request the CDR mechanisms. Now, a structure of the CDR is divided into CDR standing forum, CDR empowered group and CDR cell. What is its function? CDR standing forum is for the policies and the guidelines making. CDR empowered group address individual case, like let's say some cases has come to the CDR. Now this CDR will form a committee, form a group of people, and they will assign that task to file, to frame everything and give it to the standing forum or the cell or the CDR main body. Then they can proceed with the CDR mechanisms. Now what is CDR cell? CDR cell helps above two, that is administrative work are done by the CDR cell. Now we will see the provisioning. This quick notes I already provided in the group. Now we will see what all is important here. Now for the provisioning, even the standard, some of the standard assets has to be provisioned. Like in the case of agriculture, if someone has taken loans at the same time, when the bank release the loans, at the same time they have to set aside 0.25% of the amount of the loan they have given, so that it could be kept aside, and if the loan becomes bad, some of the loan becomes bad, they can be treated with that set aside amount. So it's a precautions that banks take, because banks are of the view that might be some loans become bad. Now for the agriculture it's 0.25%, small medium enterprise it's 0.25%, commercial real sector it's 1%, and commercial real sector residential 0.75%, micro small industries it's 0.40%, and other loans advances it's 0.40%. Now what if the loans or the accounts become substandard? NPA. Even before the NPA, the three classifications, like for the first 30 days it becomes SMA 0, that is a special mention account 0, and and 30 to 60 days it becomes SMA 1, and then SMA 2 for 60 to 90 days. Why this SMA concept came? Because it's a special mention account, and they have to inform to the RBI. If the bank has to file a report to the Reserve Bank of India, if there is a special mention account, especially the case of the account which is more than 5 crore of rupees. The CRILC is mainly for that purpose only. Now the SMA, when the NPA, when the accounts becomes non-performing assets, now till 3 months to the 12 months it becomes non-performing assets. After that the name changed of the NPA, the name changed to the substandard. Now for the another 12 months it becomes substandard, the name becomes substandard, but after 12 months the name got changed to doubtful. The same name got changed with that times, so this should be kept in mind. And in the doubtful one, that is for another 1 year, after 1 year it becomes doubtful 2, and it will become for 2 years. The doubtful 2 becomes, the name doubtful 2 will keep itself for the 2 years, that is up to 60 months. Now if greater than 60 months it becomes doubtful 3, or you can say the asset got lost or loss asset. Now in the non-performing assets, the substandard, what all provisioning is required? If the account is secured, then 50% provisioning is required, but if it's unsecured, then 25% provision is required. In the doubtful cases, 25%, 40%, 100% for the 1, 2, 3 respectively. And if it's secured, and if it's not secured, 100% straight away. In the doubtful cases, loss 100%. Now the doubtful plus ECGC guaranteed, then provision is done only the excess part of the guaranteed amount. Okay, I told you that ECGC gives guarantee for the loans. Let's say some loan becomes bad and the borrower is not unable to pay the loan, then ECGC will pay on the borrower behalf, but not complete money, only the money that is being covered. Extra amount which is not covered, then that amount only for that extra amount the provisioning is required. Now we will taking this as an example just to understand how, if guarantees is given, how the provisioning is done. Let's say the outstanding balance is 4 lakh of rupees, but ECGC cover is 50%, and period for, and it's in the doubtful 2 category. So in the doubtful 2 category, what does it mean? 40% we need to set aside the amount. The value of the security is 1.5 lakh. Value of the security of what? His own security that he has given while taking the loan. Now how could we do that? First we will deduct the amount of securities, because if we sell the securities we will get this much amount. So the unrealized value is 2.5 lakh of rupees. First we will have to calculate the unrealized values. Now this amount can't be taken, this amount can't be recovered, because through selling of the securities we could recover 1.5 lakh. Outstanding is 4 lakh and 2.5 lakh we could not recover. So this 2.5 lakh of 50% ECGC will give to the banks. Now when ECGC give 50%, because we have taken 50% cover, maximum we could take 100% also, but we have to pay premium more. Now 1.25 lakh given by the ECGC. Now the unsecured balance is 1.25 lakh of rupees. This is unsecured. This is the money which is not going to come to the bank until unless bank do the recovery, bank do the process to recover the amount from the borrower through many provisions or through many procedures. So this 1.25 lakh, we need to first do the provisions as per the Reserve Bank of India, and we could do the recovery process as and when required. After, and when the money will come in future, then we will set aside, we will settle these provisions also. Now at this time, at this particular time, we need to do the provisions. What all? For unsecured amount we have to do 100%, and for the secured we need to do 40%, because in the doubtful we have learned that 40% is required. Doubtful we have seen that if it's unsecured, if it's secured, then 40% need to do, and if it's unsecured it is 100% we need to do. Here in this case 1.25 is unsecured, so for 1.25 we are doing 100% of provision, and for the secured amount, which is what is the secured amount? This 1.50 is a secured amount, so for that 40% we need to provision. So total amount we need to provision is 1.85 lakh of rupees. Need is practice the questions as much as you could. The more you do, the more it will be easy in the examinations, because after reading 4 or 5 questions you will get to understand that questions are very much in from what you have learned, and it will give you an confidence, and you will fall into a very good marks, in the range of the very good marks. So this you could do the videos. Okay, all the best for your exams. Thank you.